I want you to think about your last losing trade, not the biggest one, just the last one. Close your eyes for a moment and replay it. You entered with confidence. Everything lined up. The trend looked perfect. Your analysis made sense. You were convinced this trade was going to work. Then the market moved against you. Only a few pips at first. Nothing serious. You smiled and said, "It's just a pullback." Then it moved a little further. Your confidence started fading. You checked another time frame, then another. You opened Twitter. You watched another trader's live stream. You searched for someone, anyone, who agreed with your analysis, not because you wanted the truth, because you wanted reassurance. Deep down, something had already changed. This was no longer about making money. This had become about proving you were right. And that's the trap. Most traders believe they're trading against the market. They're not. They're trading against their own ego. The market doesn't care whether you're right. The market doesn't reward intelligence. The market doesn't reward confidence. The market rewards one thing: discipline. Yet every single day, traders sacrifice discipline for something far less valuable: being right. It's one of the strangest paradoxes in trading. The people who become consistently profitable aren't obsessed with being right. They're obsessed with managing risk. But most beginners, most intermediate traders, even many experienced traders, still carry one hidden belief: if I'm wrong, I've failed. That belief quietly destroys careers. It causes traders to move stop losses, hold losing positions, average down, refuse to admit mistakes, ignore new information, and slowly transform a manageable loss into a devastating one. Today's video isn't about charts. It isn't about indicators. It isn't about strategies. It's about something much deeper. It's about identity. Because the moment your identity becomes attached to your analysis, you stop trading probabilities. You start defending your ego. And that's a battle the market wins every single time. If you've ever held a losing trade because you couldn't admit you were wrong, if you've ever argued with a chart instead of listening to it, if you've ever told yourself the market is wrong, then this video is for you. Because today, we're not just talking about trading. We're talking about you. Let's be honest, losing money hurts. But that's not what hurts the most. If it were only about money, you'd close the trade the moment your stop loss was hit. Instead, you hesitate, you negotiate, you hope. Why? Because what you're protecting isn't your account, it's your identity. Think about how you learned growing up. When you answered a question correctly in school, you were praised. When you got the answer wrong, you were corrected. Sometimes embarrassed, sometimes laughed at, sometimes compared to someone else. Slowly, without realizing it, your brain created an association. Being right meant safety. Being wrong meant discomfort. That programming followed you into adulthood and, eventually, into trading. Now imagine you're looking at your charts. You spend 3 hours analyzing the market. You draw your support levels, your resistance, liquidity, market structure. You convince yourself this is the perfect setup. Then you enter. At that moment, something interesting happens. The trade stops being just a trade. It becomes your opinion, your prediction, your reputation, your intelligence. Now, if the market goes against you, it doesn't feel like your trade is wrong. It feels like you are wrong. That's why it hurts. You're not defending a position, you're defending yourself. I've seen traders hold losing positions for days, weeks, even months. Not because they believed the trade would recover, because they couldn't bear admitting they made a mistake. It's painful, not financially, emotionally, because the ego whispers, if you close this trade, you lose. But here's the truth. Closing a losing trade doesn't make you a loser. Holding it because your ego refuses to accept reality, that's what causes real damage. Think about a surgeon. Imagine a surgeon begins an operation. Halfway through, they realize the original diagnosis was wrong. What would you want them to do? Continue anyway because they don't want to admit a mistake? Or change course immediately? Every rational person chooses the second option because reality matters more than pride. Trading is no different. Yet many traders do the exact opposite. They continue operating on a bad decision because admitting the mistake feels worse than continuing it. Have you ever noticed how quickly your mind starts creating excuses after entering a losing trade? This level is still valid. The institutions are manipulating price. They're hunting my stop. It's just a liquidity sweep. Price always comes back. Maybe, maybe not. But ask yourself something. Would you still believe those explanations if you weren't already in the trade? Or are you only believing them because they protect your ego? That's an uncomfortable question, but it's also an important one. Number one of the biggest breakthroughs I ever had as a trader happened when I stopped asking, "How can I prove I'm right?" and started asking, "What if I'm wrong?" That single question changed everything because it forced me to become curious instead of defensive. It allowed me to see information I had previously ignored. It allowed me to respect uncertainty. And most importantly, it separated my identity from my trades. You see, the market doesn't ask whether you're intelligent. It doesn't ask how many books you've read. It doesn't care how many years you've traded. Every candle is asking only one question: can you adapt? The traders who survive aren't the smartest. They're the most adaptable. They don't marry their analysis. They don't defend opinions. They don't argue with price. They simply observe, respond, adjust, and move on. That's real confidence. Real confidence isn't saying, "I'm always right." Real confidence says, "I'll probably be wrong many times, and that's okay." Because every loss is simply information. Nothing more, nothing less. The market isn't attacking you, it's educating you. But education requires humility. And humility begins the moment you stop needing to be right. Here's something I want you to remember. The market has humbled every great trader, every hedge fund manager, every billionaire investor. Every legendary trader you've ever admired has been wrong, repeatedly. The difference is, they didn't build their identity around being correct. They built it around managing risk. Imagine how much emotional freedom you'd experience if being wrong no longer threatened your self-worth. Imagine how much easier it would become to close losing trades. Imagine how much calmer you'd feel during uncertainty. Imagine how much more objective your decisions would become. That's the trader you're becoming. Not someone who's always right. Someone who no longer needs to be. And strangely enough, that's usually the moment consistent profitability begins. Because once your ego leaves the trade, your discipline finally has room to enter. Can I ask you something? Have you ever watched a trade hit your stop loss only to see the market move in your original direction minutes later? I know what happens next. You lean back in your chair and say, "I knew it. It was just stop hunting. My analysis was right." But was it? Or is your ego trying to protect you from the pain of accepting that trading is based on probabilities, not certainty? This is where many traders become trapped. The moment you stop treating your trade as a probability and start treating it as a prediction, your ego quietly takes control. The market is no longer your teacher. It becomes your opponent. Every candle that moves against you feels personal. Instead of asking, "What is the market telling me?" you start asking, "How can I prove I was right?" That single shift changes everything. You stop observing. You start defending. You stop adapting. You start resisting. The truth is, your ego doesn't care about making money. It cares about winning arguments. That's why you'll sometimes ignore obvious signs that the market structure has changed. You'll notice momentum fading, but convince yourself it's only temporary. You'll see a key support level break, yet tell yourself it's a fake breakout. You'll watch volume increase against your position and still refuse to exit, not because the evidence supports staying in the trade, because admitting the evidence is correct would mean admitting your original analysis was wrong. And your ego hates that. The market has one rule. It doesn't reward conviction. It rewards adaptability. Imagine driving with GPS. You take a wrong turn. The GPS doesn't insult you. It doesn't argue. It simply recalculates. Now imagine arguing with the GPS. No, I'm right. I'm staying on this road. Eventually, you'll end up farther from your destination. Trading works the same way. The market is constantly giving you new information. Every candle is an update. Every breakout, rejection, and shift in momentum is the market saying, "Here's the latest information." Professional traders recalculate. Emotional traders argue. Think back to your biggest trading loss. Be honest with yourself. Did it become large because the market surprised you? Or because you refused to change your mind? Most catastrophic losses don't begin as catastrophic losses. They begin as small mistakes that the ego refuses to correct. A 1% loss becomes 3. 3 becomes 6. 6 becomes 15. Not because the strategy failed, because pride refused to let go. One lesson changed my trading forever. The market doesn't pay me for being right. It pays me for managing risk. Those two things are completely different. You can be right and still lose money. You can be wrong and still make money over the long term if your risk management is solid. That realization is incredibly freeing. You no longer have to win every trade. You only have to execute your plan consistently. The next time you're in a losing position, pause before making your next decision. Ask yourself one question. Is this decision coming from my trading plan or from my ego? That question may save your account one day, because your biggest competitor isn't another trader. It isn't the institutions. It isn't the market makers. It's the version of yourself that would rather protect its pride than protect its capital. The day you stop needing to prove you're right is the day you begin trading with clarity. And clarity is far more profitable than certainty. Have you ever caught yourself saying, "I know this trade is going to work"? Not, "I think." Not, "There's a high probability," but, "I know." That single word has probably cost traders more money than any bad strategy ever has. Because the moment you believe you know what the market will do, you stop listening to what it's actually doing. Think back to one of your biggest losses. Was there a moment, just one moment, when the market gave you a chance to get out? Maybe structure changed. Maybe momentum weakened. Maybe your stop loss was only a few pips away. Maybe everything inside you knew it was time to close the trade, but you didn't. Why? Because another voice spoke louder. It whispered, "No, I'm right. The market will come back." That voice isn't confidence, it's attachment. When you become attached to your analysis, every candle that moves against you feels like an attack on your intelligence. You stop reading price objectively. Instead, you begin negotiating with reality. You zoom into different time frames, hoping to find confirmation. You search social media for traders who share your opinion. You ignore information that contradicts your bias while embracing anything that supports it. Without realizing it, you've stopped searching for the truth. You're searching for validation. And there's a huge difference. The market doesn't care how much time you spent analyzing. It doesn't reward effort. It rewards adaptability. One of the hardest lessons every trader must learn is this: you can do everything right and still lose. That doesn't mean your strategy is broken. It doesn't mean you're a bad trader. It simply means probabilities played out differently this time. The best traders in the world understand this. That's why they don't become emotionally attached to individual trades. They know every trade is just one event in a long series of outcomes. Imagine flipping a coin that lands on heads 60% of the time. Would you be surprised if it landed on tails once? Of course not. You understand the probability. Trading works the same way. A high probability setup is never a guaranteed outcome. Yet many traders secretly expect certainty. And when certainty doesn't arrive, frustration replaces discipline. Here's a mindset that changed my approach to trading. Instead of asking, "How can I prove I'm right?" start asking, "What is the market trying to teach me right now?" That simple question shifts your focus from defending your opinion to learning from the market. Learning traders improve. Defensive traders repeat the same mistakes. The market isn't asking you to predict the future. It's asking you to manage uncertainty. Those are two completely different skills. The traders who become consistently profitable aren't the ones who predict every move correctly. They're the ones who respond intelligently when they're wrong. Because being wrong isn't the problem. Refusing to admit it is. The next time you're tempted to hold on to a losing trade simply because you know you're right, remember this: the market doesn't pay you for being correct. It pays you for being disciplined. And discipline always begins with humility. Can I tell you something that took me a long time to understand? Closing a losing trade isn't failure, it's maturity. When I first started trading, every losing trade felt personal. I didn't just lose money. I felt like I had lost confidence. I questioned my ability. I questioned my strategy. Sometimes, I even questioned whether I was cut out for trading at all. So instead of accepting small losses, I fought them. I'd move my stop loss. I'd tell myself the market was just shaking out weak hands. I'd hold on a little longer. Sometimes I'd even add another position, hoping to lower my average entry. For a few moments, it felt like I had taken control again, but I hadn't. I had simply delayed accepting reality, and reality always catches up. Maybe you've done the same. You know your stop loss is there for a reason. You promised yourself you wouldn't move it, but when price gets close, you hesitate. You start thinking, if I close now, what if the market reverses? So you wait. Then you wait a little longer. Before you know it, a planned 1% loss has become 4 or 5%. Not because your strategy failed, because your emotions took over. Here's what changed everything for me. I stopped looking at closing a trade as admitting defeat. I started looking at it as protecting my future. Every small loss I accepted gave me another opportunity tomorrow. Every loss I refused to accept took that opportunity away. That's the difference. Professional traders don't see stop losses as punishment. They see them as protection. They understand that capital is their inventory. Without it, they can't participate in the next opportunity. Imagine owning a business. If one product isn't selling, would you keep investing more money into it simply because you've already spent money? Probably not. You'd cut your losses and move your resources somewhere more productive. Trading is no different. Every trade is simply an investment decision. Some work, some don't. The goal isn't to avoid being wrong. The goal is to keep being wrong inexpensive. There's another mindset shift that helped me. Instead of saying, "I lost," I began saying, "I paid for information." Every losing trade tells you something. Maybe the market conditions changed. Maybe volatility increased. Maybe your timing was off. Maybe nothing was wrong at all, and probability simply played out. Either way, the loss isn't wasted if you learn from it. But if your ego refuses to accept it, you lose twice. You lose money, and you lose the lesson. That's an expensive combination. The traders who improve the fastest aren't those who make the fewest mistakes. They are the ones who acknowledge mistakes the quickest. They don't argue. They don't defend. They don't make excuses. They adapt. The next time you close a losing trade exactly where your plan told you to, don't think, "I failed." Think, "I kept my promise to myself." Because every time you honor your rules, you're building something far more valuable than a winning streak. You're building trust. Trust in your process. Trust in your discipline. And most importantly, trust in yourself. That's the kind of confidence that survives both winning streaks and losing streaks. Because it's not built on being right. It's built on doing the right thing, even when it's uncomfortable. Here's one of the hardest truths every trader has to accept. The market doesn't care what you think. It doesn't care how many books you've read. It doesn't care how many hours you spent analyzing the chart. It doesn't care that your mentor agrees with you. And it certainly doesn't care how badly you need this trade to work. The market simply moves. For a long time, I thought good analysis guaranteed good results. If I spent enough time studying the chart, surely I deserve to be right. But that's not how markets work. Markets are driven by millions of participants, banks, institutions, retail traders, algorithms, economic news, unexpected events. Every second, new information enters the market. That means price is constantly changing. And because it's constantly changing, your opinion must be flexible too. The problem is that many traders become emotionally attached to their analysis. Instead of saying, "This is my current idea based on the available information," they say, "This is what's going to happen." Do you hear the difference? One mindset is flexible. The other is rigid. Rigid thinking is dangerous in trading. Imagine you're driving somewhere you've never been before. Your GPS tells you to turn left. You ignore it. A few minutes later, it recalculates. Again, you ignore it. Eventually, you're completely lost. Whose fault is it? Not the GPS. It kept giving you new information. You simply refused to adjust. The market behaves in the same way. Every new candle is information. Every break of structure is information. Every rejection is information. Every increase in volume is information. Professional traders treat the market like a conversation. The market says something. They listen. They respond. Amateur traders treat the market like an argument. The market says something. They disagree. They try to prove it wrong. That's a battle they'll never win. One question changed my trading forever. Instead of asking, "Is my analysis correct?" I started asking, "What is price telling me now?" Notice the difference. The first question focuses on the past. The second focuses on the present. And profitable trading always happens in the present. The market owes you nothing. It doesn't owe you a winning trade because you followed your plan. It doesn't owe you a reversal because you've already lost money. It doesn't owe you validation because your analysis was detailed. The sooner you accept that, the more freedom you'll experience. Because now your confidence isn't tied to being correct. It's tied to your ability to adapt. The best traders in the world don't predict every move. They simply recognize when they're wrong faster than everyone else. That's their edge. They don't waste energy defending opinions. They preserve energy for making better decisions. There's a powerful phrase I want you to remember. Strong opinions, loosely held. Have an opinion. Build your analysis. Trust your process. But the moment the market provides evidence that you're wrong, let it go. Not because you're weak, because you're professional. Flexibility is not indecision, it's intelligence. And the trader who learns to change their mind at the right time will always outperform the trader who refuses to change it at all. Every profitable trader eventually discovers the same truth. You don't get paid for having opinions. You get paid for responding correctly to reality. The market doesn't reward certainty. It rewards adaptability. And adaptability begins the moment you stop trying to convince the market that you're right. If there's one lesson I hope you take away from this video, it's this. You don't have to be right to become a successful trader. Read that again. You don't have to be right. For years, I believed that becoming profitable meant predicting the market better than everyone else. I thought the best traders were those who were almost always right. But the longer I traded, the more I realized something surprising. The traders who consistently make money aren't obsessed with being right. They're obsessed with protecting their capital. They understand that every trade is simply a probability. Sometimes that probability works in their favor. Sometimes it doesn't. And they're okay with that, because their confidence isn't built on winning every trade. It's built on following their process. If you're constantly trying to prove yourself right, you'll find yourself arguing with the market. You'll move your stop losses. You'll hold losing trades longer than you should. You'll ignore new information because it doesn't fit your original idea. And before you know it, you'll be protecting your ego instead of your account. But the moment you let go of that need to be right, everything begins to change. You become calmer, more objective, more disciplined. You stop taking losses personally. You stop chasing validation. And you start making decisions based on what the market is actually doing, not what you hoped it would do. Remember this, the market doesn't reward opinions. It rewards discipline. It doesn't reward certainty. It rewards adaptability. And it doesn't care how many times you're right. It only cares how well you manage risk when you're wrong. If this video helped change the way you think about trading, do me a favor. Hit the like button so more traders can discover this message. Subscribe if you're serious about mastering the mental side of trading. And don't forget to turn on notifications so you never miss a new episode in this series. We're building more than a trading channel. We're building a community of disciplined traders who understand that long-term success starts in the mind. In the next video, we're going to explore a topic that every trader experiences, but very few truly understand: the psychology of losses. Losing is inevitable. Suffering is optional. Why do some traders recover quickly after a loss, while others spiral into revenge trading, self-doubt, and emotional decision-making? Why can one losing trade destroy an entire week or even an entire account? More importantly, how do professional traders lose without losing their confidence? In the next episode, we'll uncover the hidden psychology behind losses, how to process them without emotional damage, and how to turn every losing trade into a stepping stone toward consistency. You won't want to miss it. Until then, master your mind, master the market.